We're also negative on the 15, and so again, the focus is very important if we're going to trade it. And therefore, if we don't have the information, we don't do the trade. If we're suspicious that one of the labels is not correct, we stand down and we don't do the trade. Of course, if the trade is not going to create the right equity also for us, we don't do the trade. So because I'm going to do the trade, if I'm going to do the trade, I'm keen on having all the information related to the trade so that if I'm going to observe it for the next coming hour, immediately I will know if this is in line with expectations or it is not. And therefore, I can confirm to take the trade or not. All right, so we know we have a 1, we have a 2. We believe it's going to be 2A, 2B, and a 2C. Yes. We have confirmed that 2B is finished, or some kind of a B is finished, or the dot 3 is finished. So because we have a dot 1, dot 2 here, this is momentum segregated, correct? 1 and a 2. A 3 at that point to 4. You have continuous negative momentum, so it must all be a 3 all the way up here, a 4 and a 5. Again, a dot 3. Remember, dot 1 and dot 2 is where you had positive momentum. Dot 3 is where you have a negative momentum. This is a correction anyway. This then rounds up into high degree A, high degree B. We're waiting for high degree C. What could actually happen is the following. I have a bounce out of an internal level 1, a local internal level 1, but it is a correct bounce because 2A, 2B, and 2C must be also a 1 and a 2, 3, 4, and 5. So, nice thing about cycles is that sorry for that disruption. I was saying nice things about cycles is that they're really very, let's say, fractal in nature and work both ways. It depends on you want to take the short-term trend or the long-term trend. You get the same bounces, the same labels. All right, so we're still going to be doing a 2C. It's either we are doing a 2C or the market breaks down to the downside because, this is a leg 1. This is a leg 2, and we're really going to a leg 3, right? And that's the leg that can go all the way to 65,500, can go to 64,500. You can see 65 right there, and we're back trending. All right, so this means that that 2C that we think is a 2C before you have it 1 into C, 2 into C, and 3 into C can actually reject the level 1, can reject that 69,300. All right, fail. And we get this move, and this is really the move we want to trade. You don't really need momentum at that point. All right, so the best entries, we want to be on the side of the trend. What we believe is going to happen is this is just an internal pattern. Market is going to break out higher. I want to begin to do my entries below a level 1, and therefore my entries are related to 61.8 between resistance 1 and the pivot level. This distance is around 61.8. If I do internal Fib divisions, it's 61.8. So I will take an entry at 61.8. This is, of course, a wedge. I will also take an entry at 78.6. Around there, below resistance 1. The wedge can spike level 1, transcend higher, and fail. I'll take profits for these $100 lower. That's all. Because at that point, I'm still doing some kind of muted double head like this one. Once I have taken in some yield, taken in some money, I will not be apprehensive when I'm doing the trade. Then I'll do a third entry. I will also check the momentum then. If it has reversed, it is no longer positive, it is beginning to show a trigger, I will do maybe a lower entry. Maybe I'll do the same entry. It is the third entry that I will hold, that I will really hold, attempt to hold to 65,000, 66,000, 65,500. All right. Check the momentum picture and really hold to more lucrative levels. If I don't see degree 3 negative momentum at that point, if I don't see degree 3 negative momentum on the 5 and 15 minutes at that, once I fail at that top, and I still see splattered momentum, like we have in this kind of momentum, meaning I get a degree 3, but still the market rears higher, then unless I see degree 3 on the 5, degree 3 on the 15, both, I will not hold. If I get degree 3 on the 5 and degree 3 on the 15, I will hold. But if I get degree 3 on the 5 and no degree 3 on the 15, and the 5 rears back up again or reverses back to some positive momentum and so on, then I will always take profits 100 points or $100 or $150 from entry for the position that I have made or that I have taken. I will also divide my position. So assuming I'm going to sell a coin, I'll sell 0.5 of a coin here, 0.5 of a coin just below resistance 1. Again, 0.5 of a coin below resistance 1, 0.5 of a coin, 50% between the pivot and resistance 1. Once I get negative momentum on only the 5 minutes, 0.5 of a coin, 61.8 above the pivot, 0.5 of a coin at the pivot, always taking just $100 to $150. All right, you couldn't tell, of course, once you do the position, maybe you're going to get stronger negative momentum on the 15 minutes continuation. So once you're at the pivot, once you have broken out of or have taken the first initial profits, you don't want to have a take profit. Let the trade run a bit. Even if it bounces and you get to confirm that you're not having continuous degree 3 negative momentum, we can still wait for bounce to the downside, close out $100 lower, and then redo the entries, or we would have created the right yield if we have already created, if we do create seriously at least 50% of our desired yield, we can stand down for the day. Usually this will mean that you have been trading more than 3 hours and beginning to lose focus, and therefore you can stand down for today or switch to a position or swing trade if the momentum is right, of course. If the momentum is not right, then no need. Okay, so we've just been looking at trade management. It has to be detailed. If you expect, really, if you have expect to be responsible for the money that you are required to make or for the money that you want to make, it has to be detailed, and you have to be measuring your progress on a daily basis. And in order to measure your progress on a daily basis, everything must be detailed like this. So going into the trade, you know exactly what you're going to do so that you can measure your success and your failure. So for instance, if the market rises, I do the shorts and the market continues to rise, I will immediately know that I'm wrong and that, well, there is a reversal at this point, and actually the market is bullish and not bearish, and the whole technical picture has reversed. It becomes very fast, very clear, very confirmed, and I will, of course, reverse my trade measures into longs. But if my projections or the plan works as defined, then I will have something to show within 36 hours. I will at least have done these 2 entries, collected $100 on each of them, All right, so I'll have something to show within 36 hours. If I'm very fortunate, the third entry will be correct and will take me down to a level 3. If I'm not fortunate and the third entry does not take me down, at least I have something to show for my efforts, and I can, of course, reassess why the break to the downside is not working, reassess the technical picture, and consider if this is just a consolidation, this is a shoulder level that will blow up to the upside, break out to the upside. Of course, the market is dynamic and will change on a daily basis, but we cannot afford to just watch it change on a daily basis without collecting yields, without doing the short-term yield correction, because it is too emotionally devastating to just exert effort, exert work on a daily basis without getting rewards. All right. So I believe we have covered the projection that we want to do. Would want to engage the market at 69,550, probably also 69,250 should be fine. We have just detailed the strategy. Shorting these levels of a level 3, of course, you would want to have a hedge at level 1 to reverse with grace. So if all I've been talking about as a plan doesn't unfold, doesn't work out, it's always possible. What follows next is that we are going to waste time, which is a resource, over the coming 2 days to reverse out of that trade. We will already be engaged at these levels. Market moves above that yellow arrow. It's a half size stop, half size hedge. We take a half size loss. We're seeing an inverted shoulders, and the market is going to be attacking the neckline at 72,000. So we begin to long into the direction of the neckline, make money to replace what has been lost at that half size loss, and to gradually clear out the remaining short, all right, against the hedge entry. Hedge here is at 71,000. So we're going to be doing entries at 69,250. Hedge is 71,000, about $1,800 higher, $1,750 higher, or $175 per 1/10 of a coin. Are we seeing a trigger at this point? Once, if we get a trigger, we must have degree 3 negative momentum on the 5 and 15. We are not. I believe we are having degree 3 negative momentum on the 15. And actually on the 5. Not really, not extensive yet, but also the structure is not right. We don't have an indentation into a level 1. Therefore, and we have not broken below level 1 neckline, where we can still get a reversal to do a wave 2C, or to do a wave 4 that rejects below level 1. So we don't have a trigger. A trigger must not only show in terms of a continuous momentum, either negative or positive, but also must show that you have taken out the top of a level 1 or taken out the top of a level 3. If you haven't taken out the most closest level 1 related to the momentum plot, then of course there is no trigger. There is just a double inverted head, and we're still going to attack that neckline and do 2C or do dot 4. Remember, US Tech 100 is expected to be moving higher. Probably Bitcoin will be correcting on a higher, much more depressed scale.